Thank you for joining me for a look at sentiment in the stock market. Now, we cover a lot of ground here at Banyan Hill, and if you don't want to miss any of our updates, be sure you subscribe to our channel. To start with, sentiment is an important indicator, and it's not one of the more popular indicators. The fact that it's not popular gives it some of its value. Sentiment indicators include surveys, such as one done by the American Association of Individual Investors, and there's another one by Investors Intelligence with a very long track record that's not as easily found. AAII, you can go to their website and get the data in real time. What's interesting about surveys is economists have used this idea for decades, and one of the more reliable indicators of sentiment in the economy is a survey done by the Philadelphia Reserve Bank of Philadelphia. So following that indicator, in addition to the stock market indicators, can tell you both what professionals and individuals are thinking about the stock market and the economy, and there's a high correlation between the two. For those that think sentiment doesn't really matter, this formula shows it does. And I know it's a complex-looking formula, but what it boils down to is the current market price is simply the current value of the stock times the sentiment factor, and the sentiment factor is squared. Now, this recognizes that each individual evaluating a stock will have their own idea of valuation. They'll also have their own idea of sentiment. So the formula itself is as unsolvable as any valuation formula. However, it explains why it can't be solved. Many formulas will use a simplistic PE ratio and say that the PE ratio should be 15 or some other arbitrary number and define a stock as overvalued or undervalued based on that. Well, that's not accurate, because sometimes a stock is worth a higher multiple, sometimes lower. This formula recognizes that and tells us the reason is how investors feel on average. If a majority of investors are bullish on a stock, price is going to exceed its fair value. It's that simple. This is why stocks go up and down. It's all in the sentiment. Interpreting sentiment is often done simplistically. Many analysts will say when there's too many bulls, there's too many people on one side of the boat, it's going to tip. That means it's a contrarian indicator. Well, there's an appeal to that because we think of money as limited, but it's not quite accurate. Contrary opinion assumes there's only two market states, bullish or bearish, while many investors will in fact be neutral. And as investors become neutral, that's when the cash builds up. That's when they're becoming bullish from a sentiment perspective, forward-looking. AAII survey gives us this information. Investors are asked, do you think market's going up, down, or no change? In other words, are you bullish, bearish, or neutral? They've asked the same question for years. And they provide a wealth of data. You can go to their website, you can get the information at any time, and what we see is every week there is a significant amount of neutral sentiment. This is the future buying power. So when sentiment is low on the neutral side, it's telling us that there's not a lot of buying power. It doesn't matter whether investors are bullish or bearish at that point. There's just not a lot of investors looking to add to their positions. When it's high, it means a lot of investors are on the sidelines. They're willing to buy. So that neutral number is important. Right now, what we're seeing, an awful lot of skittishness jumping between bullish and bearish. Until we see an uptick in that neutral number, I don't think we're seeing the bottom. I think what we're going to see is an increase in bullishness followed by an increase in bearishness and finally a buy signal from that neutral reading. Neutral turns out to be the most reliable indicator of sentiment. 6 months after a high reading, the S&P 500 gains more than average. Probability of a gain is significantly higher than average. When you're looking at sentiment, you want to find the uncertainty of investors. You don't want them to have a strong opinion because then they're committed and they're going to be slow to change. You want to see investors on the fence. Hopefully you found this helpful and hopefully you've subscribed to our channel, but if not, click now to subscribe to our YouTube channel. Thank you.